Hello everyone. From the requests in the Telegram channel, I realized that most people not only have a problem with monetizing movement, but also with understanding in which direction the price will move. This problem is key, as there can be no talk of monetization without a general understanding of the direction in which the price should move. Therefore, the topic of today's lesson will be structuring a general plan and creating a trading plan for oneself. That is, I will try to address the main mistakes that you might have encountered during chart analysis. Determining the market direction consists not only of the technical part, but also the psychological part. Today, I will cover both topics, where you will most likely find some solution for yourself. So let's start with the technical part. To determine in which direction the price should move, we need more than just identifying the structure and the zone from which we plan to take positions, as such an approach is completely incorrect. Your initial task is not to find the zone from which you plan to enter positions, but to enter positions according to the movement as you determine the direction. And this is very important for your understanding. I'll explain why. If you initially approach the chart with the aim of entering positions, you are looking for a zone from which you would like to enter. You assign yourself additional variables that confirm your idea and ignore negative factors on a psychological level. What is the result? You end up with stop losses, not understanding why. Because you believe that you have done the analysis absolutely correctly. This is logical, as analyzing based simply on structure, and some point of interest is much easier than fully understanding the structure and identifying both negative and positive factors. Therefore, we can conclude that initially we must determine where the price is moving, identify all the variables that exist on the chart, and only then draw conclusions based on our experience and piece together a chain of factors on the chart. This is the format in which we should work. It is advisable to write a small plan for yourself in the form of theses or questions that you should answer as you analyze the chart. You can see an example of such a plan on the screen. Personally, mine is more extensive and contains many more questions and theses that I analyze when making my decision. But today we are not talking about my plan. So let's, based on some plan like this, figure out how to analyze the chart correctly. So, now on the chart, let's step by step figure out, in principle, how to conduct your analysis, what to pay attention to, and in what format you should work. Initially, you should choose the time frames on which you should work, meaning whether it's swing trading, starting roughly from a month, ending with an entry on 4-hour or daily charts. You can do the same within the day, but there will be a completely different analysis. Today we will discuss swing trading, as it is less demanding in terms of time format. And in principle, it is more comfortable and predictable for me. So, initially we move to a higher time frame, and what can we identify here? We need to identify all the variables that exist on the chart, which we should essentially see on the chart now. Initially, we see that there was some upward movement, after which, upon reaching certain levels, fractals were removed. The price reacts and moves in a downward direction. We cannot predict the length of the correction until the formation of primary variables. In this case, the price reacts on the monthly time frame. Fractal rate. That is, we have a fractal, and as we know, a fractal is a highly liquid zone, and its removal will indicate that the price has reached some initial target and may react. We have already covered this in lessons, and you should roughly understand why the main liquidity is behind the fractal and why the price reacts to it. In this case, the price receives a rejection from this fractal and consolidates with a shadow, and as we know, consolidation with a shadow indicates the primary volume of the buyer at these levels. That is, we can conclude on the monthly time frame that the price reaches some target within this downward movement and receives some buying volume. That is, we have some volume for purchase here, which caused the price to roll back to these levels In principle, we can also note some kind of support area above in the form of FWG to which the price can potentially, in principle, come. Since if the price is to continue the downward trend, it needs some kind of refueling if it cannot break through this zone. Then most likely it will go for refueling, test the support area, and continue the downward trend. Or it won't continue, as we cannot, in principle, assert either one or the other. We can simply assume that the price should go for refueling, as there is buying volume at these prices. After which we move to the weekly time frame. And what can we already highlight for ourselves? On the weekly time frame, in this case, we see that the price is forming a weekly FWG, which is, as you already know, a primary indicator of purchases. That is, we initially had a monthly consolidation with a shadow, which indicates a buyer and demand at these levels. We also see a FWG, meaning a sharp buyback from these levels, which further confirms our idea. And now, what else can we determine? If the price forms a new support area, as if reversing the trend, meaning initially we had a bearish trend where the price tests inefficiency in the form of FWG and receives a reaction from them, as we can see. In this case, the price is already ignoring this FWG and inverts it, meaning it creates a bullish FWG. So we will mark it accordingly. What can we assume? If our assumptions are correct, then the sales volume decreases at these levels and buyers begin to prevail. Therefore, expecting a reaction from this FWG is quite logical. But up to what levels? Our initial target will be the nearest fractal. Why? Because the nearest fractal can become a refueling zone, and upon its removal, as we already know, a certain volume may flow into the market. In this case, the sales volume, which may drive the price lower. After reaching this fractal, we can conclude whether the price will continue to move to the next fractals or if the price will react, and we can say that the price will reverse. For now, we can set this fractal as the nearest target for the price. After which, we are waiting for the test of this FWG. The price tests it and receives as an instant buyback. That is, moving to the daily time frame, we can notice that the price receives a quick buyback from this zone. In other words, sales volumes came in, which pushed the price, and it was immediately bought back. At the same time, the price also removes the fractal already on the daily time frame. In principle, this is also a removal of some liquidity below. And now we can assume that this low is strong, as the price interacted not only with the FWG, but also with liquidity. Meanwhile, in principle, our trend continues. That is, a rejection block is forming. Which serves as confirmation of our hypothesis that the price should move in the direction of this liquidity. The price is already testing it, this RB, and in principle, on the 4-hour chart, we can either consider buying immediately after the formation of this RB, that is, from this zone, with a stop below this low, because the price, firstly, we have already initially identified changes on the monthly time frame that we have, that buyers are starting to dominate. We understand that the price is forming a projection block on the daily time frame from the weekly VBUAP and forming a strong low, that is, a zone that is difficult to break in price. At the same time, our target is this nearest fractal. What can act as a problematic area for us? As I said, the nearest problematic area is precisely this fractal. Targets can be higher, meaning you can set targets in this zone. But upon reaching this fractal, you will have to either fix some part, positions, retention, or moving the stop to the previous level. Why? Because this is a problematic area, and reaching this fractal and changing direction, some confirmation here with volumes can completely cancel this idea, as the price has already reacted and reached the primary target. Also, of course, reaching this fractal cancels the plan. That is, if the price reaches the strong low and breaks it, then we can assume, and in principle already say, not even assume, but say that the trend will continue without reaching this fractal, as the price does not react to inefficiency and to some support zones. What is happening with us? The price reaches the daily high in principle. And what else can we note inside this RB that we have here? Let's make it a bit bigger. Do it. What else can we highlight? Not only that, we could have taken positions, but we can also determine that if the price drops to this area, then the potential refueling will be precisely this test of the daily rejection block. That is, if the price drops to this area, then the removal of this fractal will be, as we already know, a trigger, meaning some fractal within the belt. Price. If this trigger is met, then additional positions can be taken again. Today's lesson is not about this, of course, but I'm just saying that in this format, you can take positions even during a repeated correction because the price can often refuel while reaching your target. That is, the price goes higher, then it drops lower, removes a fractal, goes higher, removes a fractal, goes higher, and moves in this manner towards your target. And during these corrections, you can add positions with the targets that we determined earlier. So, in this case, that's exactly what's happening, meaning the price removes this trigger, and in principle, you can also take positions from this trigger with a higher target. In principle, after a small correction, the price retests this trigger again, and in principle, removes another fractal, after which the price already has enough volume to reach our fractal. At the same time, you can look not only at the correctness of the analysis, meaning we identified not only positive factors, but also negative ones. That is, reaching this fractal can easily provoke the price to go lower, and we need to understand this for ourselves, rather than holding the position from here, with a stop up to here, to a higher target, just because I want to. That is, you need to understand that the market will not move the way you would like it to. You simply need to take into account all variables and all possible scenarios. Therefore, in this case, we can continue to analyze. We can say that firstly, the price reaches the fractal. The price, we can analyze in what format it reaches it, meaning the price forms an additional POG, which, in principle, can potentially become support again during a correction for the continuation of the trend. Therefore, in this format, you can continue to analyze. You can identify additional zones. That is, in this case, we had a test of the POG, and the price reaches the fractal and at the same time forms an additional MMT zone, which we have essentially discussed just recently. The price formed a new zone from which, potentially during a correction, positions can already be taken towards another fractal, since the correction after the fractal is removed most likely will occur and will be in this zone, after which positions can be taken with the target beyond this fractal. And in principle, in this format, you should analyze the chart. Now we have, in principle, with the technical part, more or less figured it out. You can for yourself. While it's difficult for you to analyze all this in your head, you can write down some questions for yourself. That is, what you should initially do. You initially analyze the higher time frame, propose some idea. That is, you should have some idea. In this case, what happened? We see an initial upward movement. Then, its change after the fractal is removed, and reaching some target. What conclusion can we draw from this? We can conclude that the price reaches some initial goal, and consolidates with the shadow of the candle, which indicates what? Some initial volume of the buyer. We switch to the weekly time frame and see confirmation of this. The price tests this FWG, and we assume that the price will reach this fractal in principle. The price does this, and we also have a POE appearing on the daily time frame, from which we could, in principle, start building positions. Therefore, you build a plan like this, establish your chain, and analyze in this format. You can write down questions for yourself that you should answer conditionally. In which direction is the price moving? Where should it reach? And so on. That is, you need to identify all these points for yourself independently. In other words, everyone's trading is built based on themselves. And a person adjusts everything individually for themselves. Therefore, now we will move on to the psychological part and the problems that may arise. And I think you won't have any more problems with the technical part. Now it's worth addressing some psychological issues that may arise for you. When you initially look at the chart with the intention of entering positions and determine the zone from which you want to enter, it is much more difficult to identify negative variables. Because if you like the trade idea, the news or other changes will not alter your opinion. To resolve this, as I mentioned earlier, you must initially determine where the price is moving and, importantly, under what conditions your idea will no longer be relevant. What do I mean? For example, you have determined that the price will move in an upward direction. Based on some variables, the price approaches your zone and you enter positions. But after a small rise, the price tests the current zone B, C, which provides a reaction, and it would be logical to move. The stop loss to B was, as we see, the dominance from the seller side, and the price can easily continue the downward trend. But most likely, you've already experienced this. You just keep holding the position, hoping that the price will continue to rise. Although, initially, this is the cancellation of your trading idea. As a result, you hit the stop loss and don't understand why. To solve this problem, before entering a position, you must answer one question for yourself. What can invalidate my idea, and what decisions should I make? The answer to this question, you can write it down in advance, so that later you don't have to come up with answers and excuses like no, maybe it will still rise, or maybe it will still fall, and basically, to avoid nonsense. Thanks to this, with proper analysis, your position will be protected, as you have identified the main problem and solved it, since you have a clear solution like move the stop to break even or lock in part. Set the stop behind the fractal. All of this depends on your system. That is, I cannot dictate to you any rules that you should incorporate into your system. But this question, I am sure, will help you. In many positions. In principle, there are still many psychological issues like fear and greed, but they are more related to entering positions rather than chart analysis. Yes, and the video has already turned out to be quite extensive. Therefore, we will be concluding today's lesson. And if you liked the video, be sure to like it, subscribe to YouTube, and follow the TG channel. If there is a topic that interests you, be sure to write it down in the comments. Have a great day, everyone. Bye-bye.